Good morning, it's Cam Brar for Cam's Mortgage Minute for April the 12th, Thursday. A colleague of mine recently pointed out an interesting headline that had run across McLeans Magazine recently. Actually, it's a cover that they ran in the middle of March. And this is what it basically said. Now, I don't know if you can see this, but essentially it said that you're about to get burned, there's a house on fire, and a family standing looking hopelessly at it burning down. Now, McLean's is certainly no stranger to running these types of headlines. They've been predicting the imminent doom and collapse of the housing market going back for years. Back in 2007, they were telling people that should they buy, sell, panic. I mean, basically it seemed like the lotus were coming and the world was coming to an end. Then in 2008, things had kind of stabilized a bit, and then we hit that subprime crisis. And during that time, we had stark headlines. The world again was collapsing. The Canadian housing market was on shaky ground. It was all doom and gloom for McLean's. I mean, they're not strangers to running these types of headlines. I mean, a lot of magazines prey on this sort of stuff. I mean, nobody stops by the side of a road to look at a flower. They look at an accident. People like to see tragedy, and magazine editors seem to glorify and love it more than anyone. Now, flash forward to where we are today. There is still these headlines that seem to appear all the time. Now, there's no doubt that the Canadian housing market has indeed slowed. There is no doubt that Canadians are carrying more debt. I mean, that's a number that's quoted all the time. But we carry far less than the Swiss. We carry less than the Dutch, the Danes. Yes, we're similar debt levels to where the Americans were before their collapse. But our housing market and our mortgage market starkly different. We don't have segregated lenders in every province. We don't have multiple lenders. We do have central banks. We have then junior lenders from there. We have a very well-regulated industry. We weren't running ninja mortgages, which were back in the subprime days, no income, no job, no assets. Hey, no questions. We don't care. We're going to give you a mortgage. We never ran that premise. I mean, there was no doubt that we've had lending that has been, let's say, stretched out, or we've got what's called the stated income lending, but we've never run to over 110% or 120% as some of the ridiculous numbers that were run in the US. Now, that's not to say that the housing market couldn't correct. It has corrected. There's regions of the country that certainly have. Housing market and housing prices have cooled. But to run headlines such as these that basically are showing a house on fire and a family running for the hills, you know what? I don't know. I guess it sells a lot of magazines. It creates fear and panic in people. But I think if you really want to get a retrospective, go back years on their covers. I mean, they've been predicting all types of doom and gloom. It's been coming. The world is ending. The plague of lotus is coming. I mean, we're going to be global warming, global freezing. I mean, we've got no limit of different things that we're inundated with all the time. The housing market is just one of them. What I tell savvy consumers like anybody else is do your own legwork, do your own research. Look at your budget. What can you afford? That's really what it comes down to. These housing numbers or the average income or the average debt load does not mean a whole hill of beans if it doesn't apply to you. Look at your individual situation. You have to make sense of whether it's a good time to buy a house. You need to make sense of whether you can afford this payment or not. Yesterday we talked about the impact of rising interest rates. It was not cataclysmic. We didn't have doomsday. I showed you how much the payments go up by. They weren't drastic amounts. But the bottom line is that you still have to be sensible and you have to pay attention. And the best thing you can do is ignore headlines such as these. And don't worry about getting burned. I mean, you're only going to get burned to a degree if you're not paying attention at the wheel. You've got to make sure that what you take on is what you can handle. Not just for today, but for tomorrow. I've been advocating that forever. And at the end of the day, you've got to decide what's going to work for you and your family. But please, don't read headlines such as this and have mass hysteria. Because I guarantee you, things will be a different headline months from now. Then we'll be told the market's great. Then we'll be told it's crappy again. It's a roller coaster ride. This is what happens constantly. The bottom line is that nobody knows for sure what's going to happen. But all you can do is safeguard your future by looking at where you're at in your individual situation. Anyway, that's my musings on McLean's and some of these other headlines. Take care of yourself. Pay attention to what's there. Look at your budget and enjoy the rest of your day. Thank you.